Assalamu alaikum everyone. So here we have a few questions from markup margin, and here in question number 1 I have taken out these from the MCQ spark papers of O-level and IGCSE accounting. Also I used 7110 for a few questions, but here they are saying Jerry started his business on 1st January 2022 with no opening inventory. So opening inventory here in this case is 0. Then they're saying on 19th April 2022 a fire destroyed all his inventory. Then they're saying Jerry provided the following information for the period 1st January 2022 to 19th April 2022. This is the period in which they did carry out the business activities, but on 19th April all the inventory got destroyed in the fire. So then they are saying revenue here is 30,200, purchases is 25,600, gross margin is 25%. Then they are saying what was the value of inventory destroyed on 19th April 2022. So like I told you guys, when margin is given, revenue is 100%. So here the revenue here is 30,200, which we need to assume that this is 100%. So I'll say here revenue 30,200, and I'm going to equate this with 100. So I'll write here revenue is 100%. And then obviously because revenue is 100, that means your selling price is 100. Your gross profit every unit is 25. So that means your cost is going to be 75%. So I'll write here 75% for my cost of sales, which I don't know, I will find out. So I'll write here X as cost of sales when I cross multiply. So I'll cross multiply here and I'll find out X. X is my cost of sales. So I'll write here cost of sales is equal to, that is going to turn out to be 22,650. So cost of sales is 22,650. Now what I'm going to do is then I'm going to use the cost of sales formula to find out the amount of that inventory which has been destroyed. So opening inventory was 0. Purchases, so we normally add purchases 25,600. there is no carriage inwards, there is no purchases returns, there is no drawings of goods, there is no closing inventory. So the assumption is that the closing inventory, whatever the inventory was there on 19th April, that got destroyed. So we need to subtract that was our closing inventory in the warehouse, and we'll write that we'll assume that inventory which was destroyed in the fire was the amount was X here, and that it must equal to 22,650. So when we find out the value for X, our value for X will come out to be 2950. So the answer here is 2950. So that's it for this question. The next question here says Tahir provided the following information for his first year of trading. In first year, opening inventory again is 0. So opening inventory, whenever it's the first year of trading for a trader, opening inventory is 0. And then they are saying there's sales returns, there's purchases. Then they are saying Tahir's gross margin. Again, they have given you margin in the question. What was the value of closing inventory? They have given you margin in the question. I told you guys that whenever margin is given, revenue is 100%, and here we have sales returns also. So whenever sales returns is there, net revenue is important. Net revenue is also called net sales. So whenever sales and sales returns is there, so net revenue is basically 100%, net sales is 100%. So that is going to be, net sales is going to be 170,000 minus 6,000, which will come out to be 164,000, and 164,000 is going to be 100%. So 164,000 is equal to 100%, and margin is 25%. So if revenue is 100, so selling price is 100, on every unit we are making a gross profit of 25. So that means our cost of sales is going to be 75%. So 75% is X. When we now cross multiply, again we'll find out the value for X, and the value for X in this case will be The value for X, that is cost of sales, in this case will be 123,000. This is my cost of sales in this case. Now what they are asking me here is what is the value of closing inventory. So I need to find out closing inventory from this question. So what I'll do is that I'll again use the cost of sales formula. Opening inventory is 0, add purchases 129,000. There is no carriage inwards, there is no purchases returns, there is no drawings of goods. Then you subtract closing inventory, so we don't know closing inventory, that is X, and then we equal this is going to equal to cost of sales, which is 123,000, which we found out through cross multiplication. So now when we'll find out the value for X, our value for X will come out to be 6,000, and the value for closing inventory is going to be 6,000. C will be your answer. Okay, the next question here, question number 3 says Roshan's sales for his first year of trading were 55,000. His gross profit margin was 20%. Again, they've given you margin, and the closing inventory was 3,200. What were the purchases for the year? Now they have made purchases unknown, and the interesting thing here is that again they have given you gross margin. So revenue again here is 100%, so revenue is 100%, and your gross profit here is going to be 20%. So our cost of sales, which is the cost, is going to be 80%. So what you'll do is that we have revenue, that is also the other name for sales. So 55,000 is basically going to be my 100%, and 80%, I don't know what is 80%, so I will equate that to X, and then now I will cross multiply and find out the value of X, and the value of X will come out to be 44,000. So this is my cost of sales. Now I need to apply the cost of sales formula. This is Roshan's first year of trading. So opening inventory is going to be 0. Add purchases. We don't know purchases. We are going to find out purchases through the cost of sales formula. So purchases is X. And then closing inventory is 3,200. So minus 3,200. Opening inventory plus purchases minus closing inventory is just the basic formula for cost of sales. The long formula is opening inventory plus purchases. Plus carriage inwards minus purchases returns minus drawings of goods minus closing inventory is equal to cost of sales. That's my long formula. But all of these values, if they are not available, so the basic formula is opening inventory plus purchases minus closing inventory is equal to cost of sales. So here cost of sales will be 44,200. 44,000 will be my cost of sales, and when I find out the value for X, that will come out to be 47,200, which is my purchases in this case, and the answer will be D. The next question here says a trader provided the following information. They've given you revenue, that is another name for sales. They have given you inventory at the start of the year, opening inventory. They have given you inventory at the end of the year, that is your closing inventory. Now they have given you markup, and markup here is 25%. And I told you guys, whenever markup is given, my cost of sales is going to be 100%. So in this case, cost of sales is 100, my gross profit is 25. And if you guys know and remember from my previous video, if this pen is going to be 100 rupees and I keep 25 as my profit, my revenue or my selling price is going to be 125. So revenue is going to be 125% in this case, and then I know my revenue, so revenue is 120,000 in this question, and that is my 125%. So what is 100% as is going through that? I'm going to find out my cost of sales. So I'll cross multiply and I'll find the value for X, and the value for X will come out to be 96,000. So 96,000 is my cost of sales in this case. Now they are saying what were the purchases for the year. So opening inventory here is 9,600 plus purchases, I don't know, is X, and then minus closing inventory is 10,200 is equal to 96,000, which will give me the value for X, and the value for X is 96,600, which is my purchases. The answer will be D. The next question says, question number 5, Gordon provided the following information for the year. Revenue is 90,000, opening inventory is 8,000, closing inventory is 2,000, markup is 50%. Gordon took goods 7,000 for his own use, so this is drawings of goods. What were the purchases? So markup, if markup is 50%, that means gross profit is going to be 50%. Cost is going to be 100 in this case because markup is given, and I told you guys, whenever markup is given, cost is assumed to be 100%. And then revenue in this case would be cost plus profit, that's going to be 150%. So I'll say this is my 150%. So revenue, I know revenue here is 90,000. So 90,000 is 150%. So what is 100% will give me my cost of sales, and when I cross multiply, my answer for X will come out to be 60,000. This is my cost of sales in this case. Now what I'll do is that I'll apply the formula for cost of sales. Again, the formula for cost of sales is opening inventory plus purchases, which I don't know, which is X in this case, minus drawings of goods, that is 7,000, which are given here in the question, and then minus closing inventory, which is 2,000, is equal to cost of sales, which is 60,000. So when I solve this for the value of X, what I'll do is that 7,000 and 2,000 will be added with 60,000, which will come out to be 69,000, and then 8,000 will be subtracted from 69,000. So I'll get X is equal to 61,000, which is my purchases in this case. The answer will be D. The next question here says a trader made the following forecasts for the business for the next financial year. What are the forecast sales for the next financial year? They've given you average inventory, which is opening plus closing divided by 2. So average inventory in this case is 80,000. They've given you rate of inventory turnover in times. If you guys know the formula for rate of inventory turnover is equal to cost of sales divided by average inventory. And then in this case, markup is 25%. So you can find out cost of sales by using the formula of rate of inventory turnover. So cost of sales divided by average inventory is equal to rate of inventory turnover. So rate of inventory turnover is cost of sales divided by average inventory, and we don't know cost of sales is X, average inventory is 80,000, is equal to 6 is my rate of inventory turnover. So when I multiply both of this, 6 into 80,000 is going to give me 480,000. So X is 480,000. That is my cost of sales. And now what I need to do is that I need to apply the formula for, so I know my cost of sales is 480,000, and then when markup is given, you always assume that cost is 100%. So cost is 480,000. That is my 100%. I don't know my revenue, but I know the markup. So gross profit is 25%. So cost plus markup is going to be 125%, which is my revenue, and this is going to be X. Now when I cross multiply, X will come out to be a greater number. Obviously the value for X will be here 600,000, which is my revenue in this case. That is my forecast sales in this case for the next financial year. Okay, the next question says here a trader's sales were 300,000. The markup was 25%. Again, when markup is given, cost is 100%. So if gross profit is 25%, my revenue or my selling price is going to be 125%. And then they're saying what was the cost of sales? What of the cost of sales for this trader? So 300,000 is 125%, that is my revenue. So what is 100% is directly going to tell me what is cost of sales. In this case, when I cross multiply, the answer that I get for this question is X is equal to 240,000. Answer is D in this case. Okay, the next question says here a business provided the following information. They've given you opening inventory, they've given you closing inventory, they've given you sales, and they've given you gross profit. What was the value of purchases? So there is no markup or margin in this case, but you need to know the concept of cost of sales here. So revenue or sales minus cost of sales gives you gross profit. So that is for sure, we know this as accounting students. So gross profit here will be 5,000. Cost of sales will be X. I don't know what my cost of sales is. I don't have the information for cost of sales, but I need to find out purchases. So I need to find out cost of sales. And then revenue here is 100,000. So when I find out cost of sales, X is equal to 95,000 is going to be my cost of sales. The cost of sales in this case is 95,000. Then what you need to apply is apply the formula for cost of sales. Opening inventory is 40,000. Purchases is X minus closing inventory is 30,000 is equal to 95,000 is going to give me my cost of sales. If I solve for the value of X, my cost of sales will come out to be 85,000. So 85,000 is my cost of sales. The answer here is A. We'll basically add 30,000 to 95,000 and then subtract 40,000. So we'll find that it's going to be 85,000 in the end. Then question number 9 here says a business provided the following information: opening inventory is 8,000, closing inventory is 10,000, rate of inventory turnover is 12 times, markup is 50%. Again the same thing. So when markup is given, cost is 100%. If gross profit is basically 50%, so my revenue turns out to be the revenue will be 150% in this case. Now they are saying we need to find out the revenue here, but we don't know the cost of sales, but we can use the formula for rate of inventory turnover to actually find out cost of sales. So average inventory in this case, opening plus closing, that is going to be 18,000 divided by 2 is going to give me 9,000. So 9,000 is my average inventory, and the rate of inventory turnover is 12 times, and I don't know my cost of sales. So when I find out X, I multiply 9,000 with 12. So what I get here is, so the cost of sales in this case will be 108,000, which I have found out through the formula for rate of inventory turnover. This is my cost of sales. And now what I'll do is that I'll use my again cross multiplication to find out a revenue in this case. So revenue basically is going to be X, which is 150%. What is 100%? So sorry, X is going to be 150% and 100% is 108,000. So when I cross multiply, I'll get my revenue in this case. So when I find out 150% in this case, so what I'll do is I'll do 150 multiplied by 108,000 divided by 100 is going to give me X is equal to 162,000, which is going to be my revenue in this case. The answer will be C. Okay, the next question here says a trader provided the following information. What was the markup? So now they are asking you to find out markup, but I told you guys markup is what? Gross profit divided by cost of sales multiplied by 100. This was the formula for markup. Gross profit divided by cost of sales multiplied by 100. Gross profit here is 40,000 divided by cost of sales, which is 60,000 multiplied by 100 is going to give me 66.67%, which is my answer. The answer in this case is D. The next question here, Abdul does not keep a full set of books. So Abdul does not keep double entry. But they're saying but was able to provide the following information. They've given you opening inventory, they've given you closing inventory, they've given you purchases. Then they have said here Abdul applies a markup of 20% to obtain the selling price of the goods. So again, selling price here is going to be 120%, cost is going to be 100%, and my gross profit is 20%. And what they are saying here is opening inventory they've given, closing inventory they've given, purchases they've given. I can see that these values can give me cost of sales. So opening inventory 5,000 plus purchases 58,000 minus closing inventory 7,000 is going to give me cost of sales, and the cost of sales in this case is 56,000. 56,000 is my cost of sales. Now I know my cost of sales, that is 56,000, is 100%, and revenue is 120%, which I don't know, which I'll find out through cross multiplication. Now I will basically cross multiply and find out the value of X, which will come out to be 67,200. X is my revenue in this case. So Abdul's sales will be 67,200 in this case. And we found this via cross multiplication. Okay, the next question here says what is markup? Markup is basically gross profit expressed as a percentage of cost of sales. The answer is A again. The next question here says Tim's gross profit was 32,000, opening inventory was 8,000, purchases were 52,000, and closing inventory was 10,000. How much were the sales? So we can actually find out cost of sales. Opening inventory 8,000 plus purchases 52,000, that is going to be 60,000 in total. Then minus closing inventory is 10,000 is equal to cost of sales is 50,000. So cost of sales is 50,000. Now I know revenue minus cost of sales is going to be my gross profit. Gross profit in this case was 32,000. Cost of sales is 50,000, and revenue, I don't know how much is the revenue here. Revenue is X, so X is equal to 82,000 is going to be my sales in this case. So the answer will be C. Okay, then then another question here says Walter provided the following information: revenue is 150,000, expenses is 25,000, the markup on cost is 25%, so revenue is 125%. What is the profit for the year? So they have asked you for profit for the year, so we need to first find out our cost of sales. So 150,000 is 125%, so X is 100%, and when you cross multiply, you find out X is equal to, X will be equal to 120,000, which is my cost of sales. Now what I'll do is revenue minus cost of sales. Revenue 150,000 minus cost of sales 120,000 is gross profit, which is 30,000, and then minus expenses 25,000 is going to give me profit for the year. So 25,000 is my expenses here, and then the answer comes out to be 5,000, which is my profit for the year. Okay, the next question here says a trader provided the following information: opening inventory, closing inventory, and sales for the year, which is also the other name for revenue. Goods are sold at a markup of 25%. So my revenue here again is 125%. What were the purchases? So revenue, that is 125%, is 60,000. So 100% is X, which is my cost of sales. Now when I cross multiply, I get the value for X, which is going to be 48,000 is my cost of sales. Again, they are asking me for purchases, not for cost of sales. So I'll write here 10,000 is my opening inventory plus purchases is X minus closing inventory is 14,000 is equal to cost of sales is going to be 48,000. When I solve for the value of X comes out to be 52,000, which is my purchases in this case. So 52,000 is my purchases in this case, which is also which I have found through the cost of sales formula. Okay, so the next question here says Toby's purchases for the year is 13,000, his closing inventory is 1,000 more than his opening inventory. So I'm going to assume that the opening inventory, let's say, is 1,000. So if the opening inventory is 1,000, the closing inventory in this case will be 1,000 more than the opening inventory, which means that the closing inventory must be 2,000. Then they are saying Toby's gross margin is 20%, so that means revenue is going to be 100% in this case, and then gross profit is going to be 20%, and my cost of sales is going to be 80%. Now they are saying okay, they have given you purchases also. So we know opening inventory, we know closing inventory, and we know purchases. So we can find out cost of sales, right? So opening inventory 1,000 plus purchases 13,000, which is 14,000 in total, minus 2,000 is my closing inventory, is equal to 12,000 is going to be my cost of sales. So you need to find out the revenue. So 80% is 12,000. What is 100% is going to tell me my revenue. So when I cross multiply, 80% is 120,000, so 100% is X. So my answer will come out to be 15,000, which is my revenue in this case. Toby's revenue is 15,000. The answer will be B. Okay, the next question here, again, this is from the past papers, but this is from one of the paper 2 past papers, and I remember I found this from 7110. I think I found this from 7110. The question here says Mary is in business buying and selling goods on credit. The following information available at 30th April 2011, which is the end of the year. Opening inventory in this case is 5,500, closing inventory is 7,500. Capital is at the end of the year 30th April 2011 75,000. Operating expenses for the year are 23,500. Operating expenses means that this is the other expenses section of the income statement, and this is the total for expenses for the year. Purchases for the year is 72,000, markup is 50%. They are asking you to calculate revenue. So if they've given you opening inventory and closing inventory and purchases, we can find out cost of sales. So opening inventory is 5,500 plus purchases is 72,000 minus closing inventories is 7,500, and we when we actually solve this, so 5,500 plus 72,000 minus 7,500 is going to give me how much? Is going to give me my cost of sales, which is in this case going to be 70,000. 70,000 is my cost of sales. So like we have been given markup here, so in case of markup, cost is assumed to be 100%. So cost is 100%, gross profit is 50% in this case, and revenue is going to be 150%. So what I'll do is that I'll use cross multiplication to find out 150%. So 70,000 is 100%, so X is 150%, and when I find out the value for X, it comes out to be 105,000, which is my revenue. So revenue in this case is 105,000. Okay, so the next question here says Aisha applies a markup of 25% to obtain the selling price of her goods. She provided the following information. They've given you opening inventory, closing inventory, and revenue. So revenue in this case would be 125%. Like I told you guys already, that when markup is given, cost of sales is assumed to be 100%. So cost is 100%, markup, that is the profit, is going to be 25%. So the revenue is going to be 125%. So gross profit here is 25%, and cost of sales is going to be 100%. Then they are saying how much were Aisha's purchases for the year. So what you'll do is you will take 70,000 as 125%, and then 100% will come out, will be X, and then when you cross multiply, you get the value for X. So the value for X will come out to be 56,000, which is my cost of sales in this case. Again, I'll apply the cost of sales formula to find out purchases. So opening inventory in this case is 4,800, plus purchases is X, I don't know what purchases is, minus closing inventory is 6,200, is equal to 56,000, which is my cost of sales in this case. So when I find out the value for X in this case, my value for X will come out to be 57,400, which is also my answer in this case. The answer is 57,400, which is the purchases. So that's it for the small MCQ type questions. So thank you so much for watching.